Hello and welcome to a wonderful Wednesday. The markets are pumping as we have entered this first day of October. There's a little bit of news, so let's dive right in. Suffice it to say, 6 is looking like the beginning of the era of mass adoption, with stablecoins leading the way and, of course, Bitcoin acting as a huge boon as it undergoes monetary adoption by traditional finance. Now, here we have Patrick Collision, Stripe CEO, and, of course, one of the leaders of the Tempo stablecoin blockchain consortium product, whatever you want to call it, and they're announcing this open issuance to help stablecoins go mainstream. Now, for Stripe, this is a really big use case. They already have all of these point-of-sale vendors, and if they can get people to start to recurringly use stablecoins under their issuance, that's a lot of transaction volume and yield that they can capture. So the key point here is to try to get people out of utilizing USDC, the most prominent stablecoin asset in the US, because any USDC holder is really supporting the competition. And they've come out with this really robust platform to help other applications, other developers use and launch and sustain their own stablecoin. So what do we see here from Open Issuance, right? It's customizable smart contracts. So they'll work with you to help build whatever sort of smart contracts you want to facilitate your own stablecoin. Issuance on any blockchain. I mean, that's very nice. USDC, just for example, charges you about $10 million to join their CCIP program, which allows the USDC to move between chains. So right here, you're already saving a buttload of money. Reserve management, this is probably something very useful, but this is large capital management and risk control. Full control over mint and burn fees, fair enough. Out of the box interoperability with other open issuance stablecoins and compatibility across Stripe's platforms. So that's like pretty big to say, hey, look, if there's other stablecoins that are coming out of the same eco, you can just swap them. Like they're very fungible with each other. That is going to be robust. And of course, this means that the more Stripe grows and the more vendors and payment providers that accept it, they will build in your stablecoin as an acceptable means of payment. So this is very big and it's a huge attack on USDC. Of course, Tether and Plasma, they're out there and they're going more blockchain focused, but everything happening at Stripe right now is pretty fascinating. They're really taking the approach of utilizing their vast network of merchants and point of sale devices and bringing that all on chain. Now, of course, they've got some really big partners already, like Phantom Cash, which I talked about the other day. Native Markets, USDH, which if you recall, that is the winner of the Hyperliquid stablecoin competition. MetaMask MUSD, I mean, that's a lot of users under the MetaMask brand, and Dakota DKUSD. So these are some very powerful and large communities, right? Like Phantom being the largest wallet on Solana, MetaMask the largest wallet on Ethereum, Native Markets being the stablecoin that's going to power the largest perps exchange, and all of these will be interchangeable with each other. So really cool. And of course, the fee capture on Stripe side says there is a small platform fee starting at 50 bips. All yield above flows to the stablecoin creator. So Stripe is scraping a little off the top of everything here. But all of this is to show that stablecoins are coming hard. Stablecoins are coming fast. They offer all sorts of amazing yield-bearing opportunities. And of course, they're risk off on the speculative side because they're just a $1-to-$1 backing. I mean, who knows? Maybe UBI comes out of this just by the wealthy putting their money into these stablecoin issuers who then use that yield to issue some sort of universal basic income. Where we go with this is unwritten, but let's be clear that we are now in full takeoff. The planes are in the air, and we are now in open territory for new lands to be discovered and what kind of technology can be built on top of these stablecoin stacks. Now, a really quick look coming from Token Terminal, an overview of stablecoins and tokenized money market funds. There's already a lot out here, and what's really interesting, I mean, these are all USD right now. We're not even looking at the euro. So sure, we have a fragmentation of liquidity, but we can see that people are working to repair this. That's exactly what Patrick is talking about with out-of-the-box interoperability. You don't want to get into a world where the USDT on Ethereum is hard to transition into USDT on Aptos, as well as USDC on Avalanche. I mean, we don't want that fragmentation, sort of like what we see with L2s, but let's just look at how much money there is in here, right? Crossing the almost shy of 100 billion. You have Tether on Ethereum and Tether on Tron. So that's pretty funny. Then you have USDC on Ethereum at about 50 billion, with all of these incumbents just starting to come out of the gate here at the end of 2025. So 2026 is positioning itself just to be a massive year for global adoption. Keep in mind, the banks are going whole hog behind the curtain with lobbying in Congress, trying to unwind the Genius Bill because they're seeing this growth. It's absolutely shocking, and they realize that it is a very competitive product to what they have to offer. And of course, just to sort of back up this ethos, you have Hunter Horsley here of Bitwise Invest. They have $15 billion in client assets, 7 years in crypto. They're a major fund in the cryptocurrency industry dealing with large capital allocators. And this is as much of a blend between crypto and traditional finance that you can get. And he says, look, heard it live at Token 2049. 2025 is the beginning of the mainstream era for crypto. And that is because even on the TradFi side, they're seeing just enormous wins. Look, BlackRock's iBIT surpasses Deribit as top Bitcoin options venue. This is huge. Deribit has been the largest Bitcoin options venue, and we have iBIT coming out here that's under a year old, and they're already crushing it. And here from Balkunas, iBIT is now the third highest revenue generating ETF for BlackRock out of 1,197 funds, and it's only 9 billion away from being number one. Just another insane stat for a 1.5-year-old ETF. Now, this is amazing. It's tremendous, and this will open more doors for crypto in traditional finance than anything else. There's nothing quite as powerful as number go up technology, and that is just what we're seeing time and time again. And if we look at it again here, this is the third largest revenue generating ETF that they've got. This is BlackRock. This is like as big as it gets. And in under 2 years, iBIT is generating close to $250 million a year in profit. So like this is tremendous tailwinds for mass adoption of Bitcoin as a monetary asset, all while in tandem, we see this stablecoin explosion just continue to pick up steam. So we'll have the speculative side of Bitcoin gets you unfucked by fiat inflation, while at the same time, if you want to earn yield, if you want to have a savings account and a non-speculative asset, stablecoins are unlocking all of this amazing opportunity. Now, one thing that I thought was a very nice and prescient post coming from Omar of Dragonfly. Dragonfly is a major investment firm in the crypto landscape. He says, look, random anecdote from Token, caught up with someone running a few billion-dollar retail book. It's only equities and bonds, but the clients want exposure to crypto. The book spits off 3% yield annually. 3%, right? Stable coins can just crush that. But at this kind of capital, right, 3% on billions of dollars, pretty damn good. So when you're looking for risk off and you just want recurring revenue without losing that underlying, this is a pretty safe play. We're looking at risk mitigation. Now, clients aren't looking to deploy new money, but are down to create exposure. So what the manager does is they allocate their new dividend cash, 90 million annually off this 3%, generated into 80% Bitcoin, 20% Ethereum. People still don't appreciate it, but there's a quiet, passive, perpetual bid that now exists with the ETFs for Bitcoin and Ethereum. And let's keep in mind that funds this large are buying into the ETFs because they have mandates in their theses and they are regulated to invest in things like the ETFs due to risk parameters. So it will happen week after week, month after month, and will continue to drive flows and propel asset prices into the year ahead. And this is so massive for just the continued bid, the continued buy price upon Bitcoin and Ethereum, especially Bitcoin, as it is becoming analogous to a digital gold or a gold for the internet. And this cannot be understated. Let's pair this with Udi's grand message for the 400,000 Bitcoin by the end of the year, which is that Bitcoiners and OGs are running out of Bitcoin. A lot of them have sold at 100K or below. And now all of these true believers, sure, they're cash rich, but there's just not Bitcoin to be gotten. It's ossifying, and it is now becoming a holders market. People want this and they want it long term. All of this together shows us an industry that is going to take over payments and basic yield, basically compete directly with the banks for everything that the banks do, but in a self-sovereign way. That's the stable coins. Then we have everything going on with Bitcoin's adoption as a monetary asset in traditional finance. Of course, Ethereum and Solana will likely follow suit shortly behind because they are battle tested, they are long term. So this is all really fascinating. Now, one side note, just like a complete split from everything, but we are seeing broader adoption happen through experimentations. This is coming from Bloomberg. What happens if you just give people cash in crypto? And Coinbase is running a pretty interesting program right now where they're giving low-income New Yorkers $12,000 over the next 5 months. And this is coming in the form of USDC being distributed straight to their Coinbase account. So there you go, Coinbase account last week. Now there's about 160 New Yorkers participating in this, age range 18 to 30. But what they are doing is taking some of this extra capital, right? What is $12,000 times 160 to Coinbase? It's really not much. It's like a blip in their revenues. And they're looking to get people that are major cash spenders to onboard into crypto. And what do I mean by that? You're like, Graham, these people are broke. They're not spending a lot of cash. Well, people in this position, they have to spend all of their cash. There is no opportunity for savings. There's no yield bearing capabilities. They have to go out and buy things. And it's very expensive to be poor. This is a constant issue, right? Everything is more difficult when you have these lesser resources. So they actually do live in a very spend heavy ecosystem. But these are also the people that send money to family overseas via remittances. And these are people to which just this kind of capital can be extremely useful to them. If they happen to take this USDC and stick it into DeFi and start a savings account, I mean, that would be primo. But this is really a edgy ad campaign to try to target a different user class. Coinbase is pretty aware that the majority of their users are looking at long-term savings. They're either buying Bitcoin and holding, or they're taking these stablecoins, and they're already wealthy, but they want to transition stablecoins into spending money. Want to get to this world where we can actually use it in the way Satoshi described Bitcoin in the Bitcoin white paper. But now with things like Stripe accepting things at the point of sales, obviously not USDC, but Coinbase is going to be going after that merchant side as well. This opens up an entire other cater of people who rely on cash for their daily existence and aren't generating all of this yield bearing assets. So I think this is a really fascinating play to try to onboard just a different use case and a different part of society into crypto. Regardless, the point is you can see that crypto is now dominating the conversation in Washington. It is dominating the conversations in traditional finance. It is spreading stablecoins and yield-bearing assets far and wide, all self-sovereign, not being rehypothecated for the bankers' AUM and for their paychecks and for their fatty bills. And just like I mentioned yesterday, between Shane Copland, CEO of Polymarket, getting flicked off, there is a massive generational divide. And the younger generation see crypto and they see it for what it's worth, and they see money that works like their phones, like their apps, like TikTok, like social media. So this is happening. It's explosively breaking through, and we can just look at the tiny news day by day as each crack in that wall, and eventually those cracks will add up, the wall will come tumbling down, and we will have a new format for money. Just wait until the crypto native children grow into adults running businesses, making money, etc., etc. This is all very bullish for asset prices. It's very exciting. As always, guys, don't overlever. I mean, we went up hugely today. Who knows what's going to bring tomorrow, but I'm hopeful that October is going to respect its name. With that being said, give me a like and a follow. I would appreciate it hugely. And as always, I'll see you tomorrow.